Alright, let's get right into it. The Solana ecosystem is electric right now. We're on the verge of potentially massive institutional money flowing in, with heavy speculation around Solana spot ETFs and what their approval could mean for the market. We've already seen capital rotating out of Bitcoin and Ether funds into ecosystems with fresh narratives, signaling a huge shift in investor appetite. And then there's the Fire Dancer upgrade. This is the big one, developed by Jump Crypto and expected to begin its full rollout in 2025. It's a brand new validator client promising to push Solana's transaction speed, with demonstrated testnet performance of over 1 million transactions per second. The stage is being set for some potentially explosive growth. Everyone's looking for that next 100x Solana gem. We all want to find that project buried deep in the ecosystem, the one with a tiny market cap that's ready to ride a massive wave. I've been digging through the Solana ecosystem, and today, I want to talk about a type of low-cap altcoin that has the potential for absolutely massive growth. To do this, we're going to create a case study of a hypothetical project. Let's call it Sosana. Imagine it's trading for around 20 to 30 cents. In this video, I'm going to break down exactly why a project with this profile could be one of the biggest opportunities of the year. But I need to be crystal clear from the start. This is not a safe bet. This is the definition of high risk, high reward. For projects like our Sosana, the data is often messy, the idea can be controversial, and there are major red flags you have to understand before you even think about getting involved. So stick with me, because I'm going to show you the good, the bad, and the ugly of hunting for these Deegan plays. First, let's zoom out. Why is everyone so focused on Solana right now? Well, 2025 is shaping up to be a pivotal year for the network. The main story is Fire Dancer. This isn't just a small update, it's a complete validator client overhaul built from the ground up by Jump Crypto. Its purpose is to massively boost network performance and resilience, addressing the outage issues that have hit Solana in the past. We're talking about a projected capacity of over 1 million transactions per second, a figure that dwarfs almost everything else in the crypto space. On top of the tech, the drumbeat for institutional money is getting louder. As of now, the SEC has not officially approved a spot Solana ETF. However, the anticipation is immense. Major players like Fidelity, VanEck, and 21 Shares have all updated their filings, signaling they are getting ready. Analysts are already predicting that if and when these ETFs get a green light, they could attract between $3 to $6 billion in new capital within the first year alone. This isn't just wishful thinking, it's based on watching how capital is moving, looking for ecosystems with higher growth potential than Bitcoin and Ethereum. This is the kind of environment that creates the perfect hunting ground for low-cap gems. When billions of dollars are potentially pouring into an ecosystem, it can lift all boats. The real challenge is finding the right one. This brings us to our case study, Sosana, ticker SOSANA. Imagine you stumble upon a Solana project like this. It has the profile of something that could deliver a 20x to 100x gain, if, and it's a very big if, the project can prove its legitimacy and actually deliver on its vision. Now before we get into the exciting parts, let's talk about the elephant in the room. When you find a project like this, your first major red flag is that finding credible data is incredibly difficult. You probably won't find it listed on major authoritative sites like CoinMarketCap. You might find it on CoinGecko, or smaller exchanges like Bitget and Femex, but the data will be inconsistent. To make things even more confusing, looking inside a phantom wallet might show a market cap of just $7,800. But then CoinGecko or another exchange could be reporting a market cap of over $20 million. This massive discrepancy is a serious warning sign. It could be a simple data aggregation error, or it could point to something much worse, like a lack of liquidity or even data manipulation. On top of that, you'll see sources that openly label the token as unverified or high risk. You might even find online reviews calling it a flat-out scam or a pump-and-dump scheme. So, with all those warnings in mind, what is this hypothetical Sosana supposed to do? According to its website and press releases, Sosana aims to be a utility token that brings order to the chaos of Solana meme coins. The core idea is a community-driven voting system they might call the meme court. Here's how it would supposedly work. Anyone holding at least $50 worth of Sosana tokens can vote on a list of nominated Solana projects every 2 weeks. The project that wins the vote gets exposure to the entire Sosana community. But here's the clever twist. The reward for voters isn't paid in SOL or USDC. Instead, the system would use a 1% transaction tax to buy the winning project's token on the open market and airdrop it to everyone who voted for it. In theory, this creates a powerful feedback loop. The community is incentivized to find and vote for quality projects because their reward is a direct stake in that project's success. For the winning project, it gets a massive influx of new holders and marketing buzz. It's a compelling idea, using community consensus to filter junk and identify gems, positioning Sosana as a decentralized vetting tool for the entire ecosystem. But again, and I can't stress this enough, this is all based on the project's own claims. Without independent on-chain verification of this system working at scale, we have to approach it with extreme skepticism. Let's talk tokenomics, another area where things get murky with these kinds of projects. According to its own materials, Sosana has a fixed maximum supply of 888 tokens. They also claim the circulating supply is equal to the max supply, meaning it's fully diluted. If that's true, it's a huge plus, as it removes the risk of future token unlocks crashing the price. However, the conflicting market cap data makes it impossible to trust any of these numbers completely. A $7,800 market cap would mean the price is fractions of a penny, while a $20 million market cap puts it in that $0.20, $0.30 range. This is the core of the risk. We're flying partially blind. The daily trading volume would also fluctuate wildly, from a few $1,000s to maybe $19,000 on an exchange like Radium. This low liquidity means the price is volatile and can be easily manipulated by single large trades. This is the wild west of crypto. On one hand, a fixed, fully diluted supply is exactly what you want for a long-term hold. On the other hand, the unverified and conflicting data means we can't be certain about anything. This is where you have to do your own research, digging into the block explorer, checking the holder distribution, and seeing if any on-chain data matches what the project claims. So, what's the potential here? This is where it gets exciting, but also purely speculative. Let's play a game of what if. What if you find a project like Sosana, and after your investigation, you determine it's legitimate? What if its meme court utility actually works and gains traction? What if you conclude the market cap is really at the low end of the spectrum? If you found a project where the true, verified market cap was only $1 million, then just reaching the $20 million valuation shown on some aggregator sites would represent a 20x return. If that project then successfully becomes a key tool in the Solana ecosystem and hits a modest $100 million market cap during the 2025 bull run, that would be a 100x return from that $1 million starting point. Given that Solana itself is attracting billions, a project providing real value could certainly see that kind of valuation, but the risk is tied directly to that massive data discrepancy. If the $20 million market cap is the real number from the start, your upside is much lower, and the risk of it being overvalued is much higher. And if the negative reviews are right, and it's a scam, the value can go to zero overnight. This brings me to my call to action. Do not, under any circumstances, go looking for a token called Sosana. It's the hypothetical project we've used for this case study. Your real homework is to become a detective. Use this framework. The next time you find a tempting low-cap project, go to its website, join its Telegram and Twitter, and just watch the community. Most importantly, try to verify its claims. Look for on-chain proof of its utility and rewards. Scrutinize the market cap data and figure out why it might be inconsistent. Read the bad reviews and see if their arguments have merit. This is the epitome of a degen play. It has all the signs of a potential 100x winner and all the red flags of a complete rug pull. The only way to navigate this is with extreme caution and deep personal research. Never invest more than you are willing to lose completely. To wrap this up, our Sosana case study presents a fascinating scenario. It's a project with a compelling, unique utility, built on what could be the fastest growing blockchain, and timed with a potential wave of new institutional investment into Solana. A fixed supply and a price of pennies make it incredibly tempting.